This is our Forex blog for July 31st, 2014. These are our currency indexes, which let you see visually what each chart is doing. Kind of like the S&P 500 shows you one chart of what the top 500 U.S. stocks are doing. Dow Jones shows you one chart of what the top, or whatever the Dow Jones 30 index is doing. These are basically indexes of the dollar, the yen, euro, pound, and of course the other main currencies, the Swiss, CAD, Australian, and New Zealand. And all you want to do is simply buy the strong one versus the weak and sell the weakest if it's on top versus the strong if it's on the bottom. That being said, a lot of people watch our blogs to see how our currency signals are doing. There's now 541 different patterns that we look for, and basically here's the euro dollar. There's one little trade today. It didn't really go up that much. It pretty much led to about a break even or maybe a pip win. Then we have a very tiny risk here where you made a little over 12 pips, and then you shorted here and you made a little bit here. So two of the three, maybe even three of the three, this might have made a pip, worked. And you know, the market's high minus low was only 30 pips. So most, you're kind of lucky to make 20 or 30% of the day's range. If it moves 100 pips from high to low and you catch 20, 30 pips, that's pretty good. This one moved 30 pips and we, made 10, 5, 15, maybe 16. We made about half the day's range. So if it, that translates to about, if it made 100 pip range, high to low for the whole day, that'd be 50 pips. It's very hard to trade when the market's not moving that much and there's no, volatility in follow through. Here's the euro yen. Small loss right here, followed by about another 2 pip loss. You pretty much got that loss back with this win. Then you have this, so that loss was eaten up here, and you're left with, this much profit on the bottom, and then you went long here. So if you add, this profit to this profit together, you have probably about 20 to 24 pips profit. Again, what is the high minus low range? We're looking at 85 to 50. It's a 30 pip range, and we made more than half of the day's range in profit, which is exceptional for low volatility. And obviously, on days where it trends, as you can see here, there's big trends to be had when the market just is going one direction. Pretty much break even, small win, nice little win, bigger than any of the wins today we've seen because the market's dead. Huge win here, 10, 20, 30, 35, 38 pips. Another, 10 pip win, very, very tiny loss. And the key to trading really is having super tiny losses and, big wins. You have wins that are, the tiniest win yesterday is 2 times bigger than the biggest loss. And that's the key to trading. And so when you use our tools manually to trade, you want to do the same thing. You want to look at this and see, okay, the euro dollar is trending up. It was above its previous day's high. It comes down to the hourly moving average, which typically is a good place to be looking for buys. You want to find a weak currency at that time to be buying the euro against. The dollar's strong. You can see the daily, weekly, monthly trends up. The yen's pretty weak. So you could be looking to buy the euro against the weak yen right at 3 o'clock here. See the 3 o'clock? Bring up the euro yen. 3 o'clock, look for a sell. And probably, 80% likely odds. I'm sorry, look for a buy. Strong euro, weak yen, 3 a.m. You look at this chart. It's kind of just going sideways, but here's the high of the range, here's the low of the range. Right before 3, it's kind of up near the high, which is good. You would expect that if the euro is looking strong and the yen's weak. You go long here when it breaks out. You put your stop underneath, the last little mini low. If you really are longer term trader, you probably put it underneath the swing low. I tend to use a smaller risk just so my wins are, a bigger multiple of what my losses are. So I'm a shorter term trader. It's extremely important to have the smallest losses possible. And once you get into a trade like this, this is your initial risk. But you can see it's starting to go up, right? You're up a couple bars. and this is a 5-minute chart. You can do range charts too, which I mostly use, or tick charts. Once it kind of makes at least 7 or 8, 9, 10 pips up, you want to move your stop to break even. There's no risk at that point. And you know, this market was in a choppy range, so it may or may not continue this trend. But you know, the euro is strong, the yen's weak. It pulls back down, really doesn't break this low right here, and is in another choppy phase. And of course, you know, if the yen's weak and the euro is strong, you have a nice little wedge pattern. You go, you know, long again right here with even smaller risks than before. Oops. And you can see the win here, where the potential win is many multiples of what this tiny risk is. And that's how you use the currency index. Again, the euro is likely to resume its uptrend. The yen was weak. Let's look for some other weak ones here. The Australian was weak all along. So is the CAD. So let's take a look at the Euro Aussie and Euro CAD. 3 o'clock when the euro is very likely to go up. Guess what happened here? If you're a really aggressive trader, you might have got in here with a very tiny risk. And these are the kind of trades you're going to occasionally pick up. And they're just massively bigger profit than what your risk is. In this case, 10, 20, 30, 35 to 40 pips profit while risking less than 10. You know, that's how using our currency indexes and currency meter can anticipate trend direction. And there's a lot of advanced techniques. I don't do classes anymore. I'm focused on trading myself. Trading is my #1 income. We're working on automated systems, and those same systems that we auto trade, we release to our traders as signals. So instead of, you know, going to class for 6 months to 5 years, learning hundreds of different trading methods, you can basically just let the computer do all the work, because the human cannot look at, we have over 50 different indicators that are used for these different patterns, including Fibonacci, trend lines, Gann angles, all kinds of advanced stuff that most people just simply, you know, from doing classes, most people just are never going to really get. So, you know, take these trades. It tells you when to get in, when to get out. The exits have 16 rules in them that know when to have wide stops and when to tighten them, and when the markets move too far up or down, and when the momentum is slowing, it tightens it. There's so many ridiculous rules in there, and I am always trying to work on improving the exit techniques. But getting back to this, we saw that the Euro Aussie went up. Another weak one was the CAD. It's probably a huge odds that the Euro CAD also went up at 3. And it did, but not quite as much, you know, because sometimes the currency, the CAD, that's weak, maybe it's down 3 or 4 days in a row, all of a sudden it gets strong. So, you know, if you bought this one, unfortunately, it didn't really generate much more profit than what your risk was. I mean, the tightest stop you would have had here was this, and it might have generated 1.5 times bigger profit than risk. If you go forward in the CAD, you'll see it more than likely went from weak to strong. Yeah, I was going sideways here. It never showed any weakness. A nice little, you know, multi-hour wedge pattern. And the daily, weekly, and monthly trend are all down. But, you know, downtrends eventually end, and either this is the first wave up in a new uptrend, or it's just a counter trend move that was, you know, violently strong. But when you see a currency that's really not going that far and breaks out, it's very likely to go up to the upper bands at the very minimum. So you can trade these short-term patterns, right? This is likely to go up right here. You can see it finally broke out at 8:30. Which currency is weak? Well, the Australian is weak. More than likely, the Australian CAD fell like a rock at 8:30. So here is 8:30. Market's kind of in a multi-hour rectangle pattern. It actually took a little bit longer to happen, but it generated a bigger return than what the risk was. And I personally like range charts, so let's just bring this up on a 5 pips per bar range chart. They allow you to have tighter, smaller risks. Here's 8:30. You can, you know, there's less noise in the market. Here's your little wedge pattern here. You would risk this amount. Oops, I meant to put the circle on here. You would risk this amount, and this is your, maximum profit. You're never going to catch that, but even if you caught half of it, your return is more than your risk. And that's the key to trading. Small losses, big wins. It's not rocket science. And with our Forex signals, which are incredibly sophisticated, probably I have never seen Forex signals out there that seem to perform well. I auto trade these, and they definitely work. And I also, many times a week trade these myself manually by using the currency indexes and our currency meters, finding the strongest and weakest ones, and then watching those range charts for a pattern. With 541 signals, oftentimes, the good trades show up. And if it matches what I'm thinking about doing, and or if it shows the buy right near a support level and there's no resistance for 20, 30 pips away, the odds are very high in my favor that I'm going to, have a win that's many times bigger than what my risk is. And again, that's the key to trading. It's the only secret.